Welcome to StockOptionAssassin.com's free Trade of the Week video. My name is Eric, and today is Monday, February 9th, 2015. And in this week's edition of Trade of the Week, we're going to talk about how to play this range-bound market. And if you haven't done so already, be sure to subscribe to our YouTube channel for more technical analysis videos and strategies. So I want to first start with the SPY here for the S&P 500. And a couple things. So first, we haven't done a trade of the week. We didn't do one in January just because we were opening the service. We're launching a new trading course here in the next week or so. And so we've been kind of busy. But one of the reasons too is the market really has just been so range bound and sort of a short-term market that it's hard to give out a trade of the week where we think we're gonna, get on something that's gonna go for, a couple weeks. So right now we've been playing very short-term trades, kind of, 2 to 5 day trades, and it really reflects the market here. So first of all, on the spiders, I have daily charts on both sides. Here I have some typical moving averages. Here I have our directional movement index and some Keltner channel, just kind of show a different view of the market, but they are both daily charts. And you can see basically since the beginning of the year, this was the first trading day of the year, we closed at about 205 and change. And then we kind of just been up and down, up and down, up and down. And today we closed right around 204 and change. So we're sort of oscillating on, I think, a couple days ago they were saying, the market goes green for the year. Well, today it's not green for the year. So you can see this sort of pattern that's going in. That's what we've been playing, at least with our members, are these short-term patterns. There's sort of an established range now between about 206 and about 199. Let me show you a couple of things we did on Friday in the MTS, our option trading service. We put on a February. We sold the 208 calls, bought the 212s for protection. So we have a bear call spread on the spiders here, and that trade is doing pretty well. If we get one more down day, we'll probably take that off. But also on here, we also got a short-term sell signal where our DMI oscillator is ticking down and our DMI stochastic extreme is ticking down. So we actually bought some out-of-the-money puts, some March 199s, to see if we can get a couple more down days, looking for 50 to 100% gain in a few days. And then if we get back to the bottom of this range, then we will take those profits and raise stops, that kind of thing. So that's kind of how we've been playing pretty much January and really up until today. We put the puts on today. We put the bear call spread on Friday. And I think there's a lot of headline news, a lot of headline risk out there between Russia, Greece, ISIS, snowstorms. I mean, there's just a ton of reasons to be bearish, yet the market keeps sort of coming back. And so that's why I'm not getting married really to either side. Right now, I'm short-term bearish, meaning I think we can pull back for a couple days. I don't know how long it goes. I mean, we could wake up tomorrow with, they're trying to meet with Russia about the Ukrainian situation. And if that turns out to be negative, then we could wake up to a huge gap down tomorrow. Or we could wake up to a huge, kumbaya as the world sort of moment, and we could be kind of moving up. So it's very important to sort of define your risk before you enter your trade. And I think that's uber important right now. So what I want to kind of go over is what I'm looking for individual stocks. When we get sort of this range-bound bearish sort of, I don't want to say bearish, but range-bound mode, I typically just focus on the indexes. I like to look at the spiders, the other indexes. Obviously, we look at things like the VIX. Let's take a look at that. The VIX kind of spiking today. It looks very range-bound, very similar to the market, but opposite, obviously. One thing we talked about last week with members is buying the VXX, not options, but just the shares. And this has been in a pretty good move. This is a good mover and moves, much, not quite like an option, but this thing can move. You can see here, you got a buy signal here where you kind of pops up, and you can get a move from 31 to 37. That's about a 20% move. You can get a 20% move in a few days. So I'm playing the bands. These are a modified Keltner channel that we use, and we hit that upper band. We start raising stops, that kind of thing. It pulls back. You take buy signals, and so volatility is sort of on the rise. And I'm playing that with shares as well. But I want to look at 4 stocks that I was kind of accumulating this list of what are some stocks that popped after earnings are kind of like hanging in there. And the reason why is if and when the market can break out here, I think these are the names you're going to want to jump on for swing trade wise. Some of you can sell put spreads on if you're an option trader, or you could buy calls. I'm not going to give you a specific play today, but these are the ones we're watching as we kind of wait to see if is the market going to be able to break out here? Is this volatility indicator, the TTM squeeze, is that going to fire long, meaning we volatility break to the upside, or is this going to turn down low? If we start to break out to the upside in the next week or so, these are the 4 names that I want to look at getting bullish positions on. I'm going to start, these are no particular order. I'm going to start with Google, and I'm looking at GOOG. You can also play GOOGL. But Google had a nice earning. Here's earnings down here, right? It had a huge move after earnings, and it's kind of just sitting there, right? It's just consolidating above the moving averages. You got the 200 up here, but you got the 13. That purple is 13 EMA. You got a 20 simple, 50 simple. The 20 looks like it's going to cross up. So I like this pop after earnings. I like the consolidation. I think all Google needs is for the market to break out and Google goes higher. Google is a great stock to sell put spreads on. If the market breaks out, you can sell something slightly at the money, 520, 515 kind of put spread. You could buy calls, although given the price of the stock, the call options are a little bit expensive. So I like bullish positions on Google if the market can get going to the upside here. The next one is Apple. Apple, I saw a headline today. I didn't read it yet. I'll probably read it later, but something to the effect of Apple saved earnings season, which is possible because it's pretty heavily weighted within the Nasdaq and the S&P. So Apple just if you look at the market, Apple just doesn't care what the market's doing. Apple is doing its own thing. What I do like about Apple is that it's sort of giving us a chance for the market to sort of if the market can break out, Apple's sort of consolidating here, although it's not a clean bull flag or anything, but we are getting to a potential oversold area, and Apple's, over $100 stock, you can sell put spreads. If Apple were to pull back to 115 or even all the way back to the 50 here, I would, the next buy signal, whatever buy signal you guys use, I use this stuff over here. I would be loading the boat on Apple calls, shares, whatever. Obviously if the market, breaks out to the downside, then we probably hold off. But any kind of pullback down here to the breakout area, I think is a buy for Apple. Or if the market breaks out from here, then I think you could just jump on Apple here and ride it to, the 120s, 130 area. The next one I want to look at is Netflix. Netflix just had a monster pop here, consolidating between about 455 and 430. I think this could actually pull back here, possibly if the market gets ugly. I think Netflix pulls back. If you can get a buy signal near the gap window area, which is about the 200-day moving average, I think that's a gift. You take it. Otherwise, it's kind of this tight little range right here. It's very, very oversold. I think, this thing's probably targeted back to 489, the previous, 52-week high. I'm going to call it, I think this thing can get to $500. If you're a longer term investor, you could probably start nibbling on shares now and just sort of buy all the way back down, maybe a third of a position here around 440, buy some more at 430, buy some more at 410, and then you place the stop below. But I think Netflix is poised to go higher. But again, all this is dependent on what the market does. And the last one I want to look at is Twitter. And Twitter had a monster day. Obviously, you can follow us on Twitter. I actually haven't been too active in January. I took a little social media break, but I am going to be getting back on there this month. But anyway, Twitter had a nice pop. And a lot of this was on the back of the news that Google and Twitter brokered a deal to where tweets would come up in Google searches. So that's kind of like an advertisement for Twitter. I'm on Twitter, so it doesn't mean the stock's going higher because I'm on Twitter, but it's it is a popular site, and I think it's heavily used. Right now, what we're seeing is classic start of a bull flag. So what we look for is you find the gap window area, which is here about $46. If it pulls back there, right now we're very, very overbought because earnings was just a few days ago. This was Friday, I guess. But I think Twitter can recapture some of this mid-50 area. I don't know if it's going to get back up here, but I think on any kind of pullback, you know, the gap, it broke this gap area, and if it can kind of fill that a little bit, then I think we go higher. But right now, if we trade sideways and the market gets going, I would be a buyer of some March or even April, slightly out of the money Twitter calls, and look for a move back up to the mid 50s. Now with Twitter, you know, it's a $47 stock at this point. I'm not a big seller or big fan of selling options or spreads on stocks this cheap. I think you're better off just buying calls and placing your risk around that. But Netflix, Google, Apple, the bigger price stocks, I think you can get a pretty good risk reward going with some option spreads on that one. In that case, it would be selling put spread. So that's what I got. We got some market analysis this week, 4 names I'm watching. And until the S&P breaks out of this range, we are playing the range, and we are currently short-term bearish. And then we'll see what happens this week. Thanks for watching, and we'll see you at the next update.